Everyone who knew Victor knew he was reckless. Victor broke every so-called golden rule of trading. While most traders preached the wisdom of cutting losses quickly, Victor did the opposite. He doubled down. When others carefully managed risk, he went all in. He held on to losing positions far longer than any rational trader ever would. And yet, year after year, he kept winning. People in trading circles talked about him like he was a walking paradox. He's going to blow up one day. Just wait. Nobody can keep that up forever. But the blow-up never came. Instead, Victor kept pulling off wins that left everyone else shaking their heads. His process seemed almost reckless from the outside. He would stare at a chart for hours, saying nothing. Then suddenly, he would slam his fist on the desk and declare, "The market's wrong, I am right, and I will prove it." Moments later, he would pile into a massive position, sometimes risking more in one trade than most traders would risk in an entire month. And somehow, impossibly, the market bent to him. And over again, he turned this audacity into millions. Was it genius? Was it luck? Or maybe it was both. Maybe not even Victor himself knows the answer. And that is exactly the point. Buried deep in Jack Schwager's decades of market wizards, interviews lies a truth that terrifies rule followers and liberates mavericks. There is no single path to trading mastery. For every Richard Dennis teaching systematic turtle trading, there's a Victor Niederhofer following pure intuition. For every Paul Tudor Jones preaching risk management, there's a Jesse Livermore betting the farm on conviction. In this video, we are tackling the question that keeps every struggling trader up at night. What do the winners know that I don't? Together, we'll uncover the psychological patterns Jack Schwager found in the world's top traders. Insights that separate legends from the rest. Before we continue, please give this video a thumbs up and subscribe if you haven't. Lesson number 1. There's no single way to trade. One of Jack Schwager's most powerful observations in Market Wizards is that the best traders don't follow a single blueprint. In fact, their methods often contradict one another. Take Richard Dennis, for example. He believed anyone could be taught to trade using a systematic rules-based approach, which gave birth to the famous turtle traders. Contrast that with Bruce Kovner, who leaned heavily on macro fundamentals, using economic data to guide massive positions. Then there's Paul Tudor Jones, a trader that obsessed with risk control. He preached cutting losses quickly and surviving to trade another day. Meanwhile, there is Victor Niederhofer that did almost the opposite, holding on to losing positions far longer than most would dare, yet still managing to win big. The lesson here is that there's no holy grail strategy that works for everyone. What works for Paul Tudor Jones would have destroyed Niederhofer. What made the turtle traders thrive wouldn't have fit Bruce Kovner's worldview. What really matters is alignment. That is, finding an approach that matches your personality, your risk tolerance, and even your emotional wiring. Because if you trade a method that doesn't fit who you are, the market will expose and destroy you sooner or later. This, for me, is the most important takeaway of Jack Schwager's Market Wizard. It's simple, but profound. Success in trading isn't about copying someone else's style. It's about discovering your own. But that raises a deeper question. If there's no single right way to trade, what then separates the survivors from the casualties? That's the question the next lesson answers brilliantly. Lesson number 2. Discipline beats brilliance. One of the biggest myths in trading is that the winners are simply smarter than everyone else. But when Jack Schwager interviewed dozens of the world's best traders and market wizards, a different truth emerged. Intelligence alone doesn't win in the markets. Discipline does. Time and again, traders admitted their edge wasn't about outsmarting others, but about sticking to their process. Michael Marcus, one of Schwager's early interviewees, turned $30,000 into $80 million. And he didn't do it because he had the most complex system, but because he learned the painful lesson of cutting losses quickly and following rules without hesitation. Paul Tudor Jones said it bluntly: "Don't focus on making money. Focus on protecting what you have." And his brilliance wasn't in predicting every move, but in having the self-control to step aside when risk grew too high. On the other side, Schwager recorded countless sad stories of blown-up accounts. And the common thread was not a lack of intelligence, but a lapse in discipline. Traders who let emotions dictate decisions abandoned their systems or believed they were too smart to fail. The lesson here is universal. Consistency beats cleverness. You don't need a genius IQ or a secret indicator. What separates the survivors from the casualties is the ability to follow rules when it matters, most especially when emotions are screaming at you to do the opposite. As Schwager's interviews reveal, trading greatness isn't about brilliance. It's about discipline practiced over years, trade after trade, until it becomes second nature. So if discipline beats brilliance, what exactly are disciplined traders disciplining themselves to do? Keep watching to find out. Lesson number 3. Risk management is everything. If there's one theme that echoes through every chapter of Market Wizards, it is this: the traders who last are the traders who manage risk. Paul Tudor Jones said it best: the most important rule of trading is to play great defense, not great offense. In fact, Jones kept a note pinned above his desk that read, "Losers, average losers." He knew that survival wasn't about swinging for the fences. It was about protecting capital so you could live to trade another day. Michael Marcus, who grew a small stake into tens of millions, admitted that his turning point came only after he learned to cut losses quickly. Before then, he blew up accounts because he kept holding on to losing trades, hoping they would turn around. Discipline and risk, not brilliant predictions, was what allowed him to compound his fortune. Bruce Kovner echoed the same point in his interview. A trader can be dead right about the market's direction and still lose everything by betting too big. For him, position sizing was the ultimate defense system. See, the truth is, skill only matters if you survive long enough for it to show. The market will always test you with uncertainty, but if you manage risk, you stay in the game. And if you don't, even the best strategies won't save you. That's why the true secret of the Market Wizards isn't genius or luck, it's risk control. And when you survive, something interesting happens. And that's what lesson number 4 talks about. Number 4. Losses are the teachers, not failures. If you read through Market Wizards, you will notice something surprising. Almost every legendary trader started with a disaster. Michael Marcus admitted he blew up multiple accounts before he ever became successful. He lost so much in the beginning that friends and family thought he was finished. But instead of giving up, he dissected his mistakes. He learned the hard way about cutting losses quickly and not letting hope drive decisions. Those early wipeouts became the foundation of his later discipline. Bruce Kovner, one of the greatest macro traders of all time, tells a similar story. On his very first big trade, he turned a few $1,000s into $40,000, then nearly lost it all when the market turned against him. That painful experience burned into his brain the importance of using stop losses and controlling risk. The thing is, without that lesson, he admitted he might never have survived long enough to build his career. Even Seykota, who later became famous for trend following, had his share of setbacks. He once said, "Everybody gets what they want from the markets." And in his early days, what he subconsciously wanted was excitement. The losses that came with that thrill eventually taught him that excitement and profitability are two things that don't mix. The point is clear. Losses are not the end of the road. They're simply tuition. The price we pay for an education the market won't give us in any textbook. The Market Wizards didn't succeed because they avoided losses. They succeeded because they learned from them and refused to repeat the same mistakes. So, if losses are inevitable and even essential, how then do you keep them from destroying you? That's what the next lesson teaches. Lesson number 5. Patience is profitable. One of the biggest lessons that come through in market wizards is that the best traders aren't constantly in the market. What they are doing is constantly waiting. Bruce Kovner said it outright. Most of his success came from sitting on his hands until the perfect opportunity appeared. He wasn't chasing every move. Rather, he waited for trades where the odds were heavily in his favor, where both the technicals and fundamentals lined up. Marty Schwartz, the famed pitbull, echoed the same principle. Early in his career, he admitted he overtraded, jumping into positions just to feel busy. And the result was losses after losses. His breakthrough came when he realized he had to treat trading like hunting, which is a game of sometimes waiting quietly for hours before pulling the trigger. And if you shoot too soon, you most likely will go home empty-handed. Even Paul Tudor Jones, who's one of the most aggressive traders in the book, was disciplined in this way. He didn't just trade because he wanted action. He built patience into his process, waiting for clear signals where risk would be tightly controlled. The point is simple but hard to live by. Good trades are rare, and the market will tempt you with constant noise. But forcing trades out of boredom or fear of missing out is the fastest way to drain an account. And as one wizard put it, don't just trade for the sake of trading. Wait for the fat pitch. But waiting requires something else, and that is confidence. But confidence has a dangerous twin. Number 6. Trade with confidence, but never with ego. One of the clearest patterns Jack Schwager uncovered is that the best traders walk a razor's edge between confidence and humility. They absolutely trust their process, and when they enter a trade, they do it with conviction, not hesitation. But the moment the market proves them wrong, they don't argue. They simply exit. No hesitation and absolutely no excuses. Marty Schwartz was quoted as saying, "I used to get hurt a lot by being stubborn, but the market is never wrong. Opinions are." His turning point came when he realized that needing to be right was destroying him. And once he let go of his ego and focused only on what the market was saying, his results changed dramatically. This is the paradox. Confidence isn't essential in this business because timid traders hesitate and miss opportunities. But unchecked ego is fatal because the market doesn't care about your pride. The losers Schwager interviewed often clung to their positions out of stubbornness, refusing to admit they were wrong. But the winners saw being wrong as part of the job. Lesson number 7. Passion drives persistence. If there's one trait nearly every market wizard shared, it wasn't genius. Rather, it was obsession. These traders weren't clocking in and out like it was a 9-to-5 job. No, they lived and breathed the markets. Marty Schwartz, for example, talked about how he filled notebook after notebook, journaling every trade, every mistake, and every lesson. He treated trading like a surgeon treats medicine, something that demanded endless study and practice. Michael Marcus, one of the early wizards, would spend nights dissecting his trades, reviewing charts and thinking through what he could have done differently. He wasn't just interested in trading, he was consumed by it. He was obsessed, and that obsession kept him pushing forward, even through devastating losses. Seykota once said that the markets were his greatest teacher, but only because he gave himself fully to them. He spent years experimenting with systems, testing ideas, failing, and trying again. And without that kind of relentless curiosity and passion, most people would have given up long before the breakthrough. Jack Schwager found this pattern over and over. The traders who lasted decades weren't necessarily the smartest in the room, but they were the ones who loved the craft so much that setbacks became fuel instead of reasons to quit. The lesson is, Trading isn't something you do casually and expect greatness. It's a craft, one that rewards obsession. The market wizards didn't just want to make money. They wanted to understand the game itself. But passion alone isn't enough, because the market is never static. And that's where the final lesson comes in. Lesson 8. Adaptability is key. One of the clearest lessons from market wizards is that the markets never stand still. A strategy that prints money in one environment can become a disaster in another. And the traders who lasted weren't just skilled, they were adaptable. Bruce Kovner built massive success by trading global macro trends, but he emphasized that the key was not clinging to a single market view. If the data shifted, he shifted with it. What he didn't do was stay married to a trade. Marty Schwartz told Jack Schwager that he could never afford to get complacent, because the moment you think you've cracked the code, the market changes the rules. That's why he reinvented himself multiple times, shifting between technicals, fundamentals, and even standing aside when nothing lined up. Seykota's entire philosophy was built on this truth. His trend-following systems worked brilliantly, but only because he kept refining them, adjusting to new conditions, and cutting what no longer worked. He even admitted that many of his biggest failures came from clinging too tightly to old strategies instead of adapting fast enough. And then there's Paul Tudor Jones, who summed it up perfectly. Don't play macho with the market. He knew that stubbornness destroys traders, and that the only way to long-term success is to be flexible. The pattern is unmistakable. The market wizards didn't survive because they found a single, unbreakable system. They survived because they evolved. They knew when to press, when to tweak, and when to step aside entirely. At the end of the day, every market wizard left us with the same roadmap. Protect your capital. Trade in a way that fits you. Stay disciplined. Learn from losses. Wait patiently for your edge. Stay humble. Adapt when the market changes. And above all, love the game. Because if you love the process, the results will follow. If you want to dive deeper into the wisdom of the market wizards, then you should check out our video on trading psychology lessons from Mark Douglas. It is one of the most important videos we have ever done on this channel, and it could completely change the way you think about trading. You should also check the description to join our Telegram channel. There, I share deeper psychology insights. If you found this video valuable and helpful, please hit the like button, drop a comment, and subscribe so you don't miss our videos in the future. Until the next time, may the trend be with you.